Hello and welcome to this week's Gig Harbor Market Update, and we're not talking about anything related to Gig Harbor today. We're going to be talking about China, and that is what I mentioned in my last video. So if you are following along every week, as you should be, then you are well aware that we're going to be covering China today. Oh, and on a more important note, I have a new video editor. I mean, I edit my own stuff myself, but just the software I'll be using. It's got some interesting features, so I might add them to this video just for funsies, so don't be surprised. Anyway, without further ado, let's get into our latest news and why you should be terrified. No, I'm just kidding. Many moons ago, I talked about Evergrande when that story first broke. And if you don't know, Evergrande is a real estate developer in China that's still under very financial dire straits here. And I was talking about how this could be the start of something and how they could really ripple through the economy and really be a contagion to the rest of the markets. And things haven't quite improved in China. In fact, one could say that the economy in China is in pretty big trouble. And that is leading real estate prices to drop dramatically in several major cities. In fact, last month, prices dropped 9%. And that's month over month. That is not year over year. That's a whole whopping 9% in just 1 month. So to put that in perspective, just the importance of real estate in China, and if you don't, I mean, you probably know that the Chinese love investing in real estate because it's a hard asset and it's not just some like financial instrument that can go, by the wayside real quick. I mean, they know that investing in real estate is a really good idea. And it is about 30% of China's GDP, and it represents 70% of China's population in terms of net worth. So a lot of people have their net worth tied up in real estate. So when it comes to any sort of real estate market correction in China, that represents a huge drop in wealth for the average Chinese individual. So as prices start to tumble, so do other real estate developers. So let's get into who is next on the chopping block. Country Garden. Yeah. Well, that's the name of, it's just so fun. It's a funny name for a Chinese real estate developer. Anyway, Country Garden is the next cookie to crumble, I guess one would say. It has been in the headlines recently, and we're going to be looking here at a Bloomberg article, going through some of the numbers they've been facing. Here, let me just pull it up before I sound like an idiot. We still got audio, good. Audio's good. So here it says, Country Garden has just days to avoid default on dollar bonds. And this was, it's an older article, but it's still, I mean, the latest news since this article was written was that they had a reprieve, so they didn't have to pay their latest bond payment. So anyway, let's read some of these highlights that I made. Well, let's just read the first thing here. The clock is ticking on Chinese developer Country Garden Holdings to avoid what will be its first default. The builder has about $187 billion worth of liabilities, making it among the most indebted property firms in the world. It must pay combined $22.5 million on a note with a grace period within that ends, and that's already ended. So that is, and that must, let me just say that $22.5 million is just interest. That's not principal. So they're not even buying down their debt. It's just that's going to keep coming back and coming back, right? So something to consider. While the firm's other debt payments and extensions, along with policy support for the housing market, lifted its shares by 14.6% on Monday, it remains down 61.8% this year. Most of its dollar notes are still indicating in deeply distressed levels ranging from 9 cents to 13 cents, even rising on Monday. So you can see what their bond has been doing. So Bloomberg reported Sunday that Country Garden, helmed by one of China's richest women, Huan, has wired a coupon payment coming due on a ringgit denominated bond. So that's, I believe, Malaysian currency. The 2.85 million ringgit, or $600,000, let's just say, coupon is effectively due September 4th. So what that's saying is, let me just read this last highlight and then we can talk about it. So despite the ring-out coupon repayment and extended onshore bond, we do not believe Country Garden's funding conditions have significantly improved. This is according to Zerlina Zhang, senior credit analyst. The ability of Country Garden and most privately owned developers to stay afloat still hinges on a meaningful and sustained recovery of home sales, which we still view as challenging. So basically they're saying we don't see the property market coming back anytime soon, and most likely these large developers will default. And we'll talk about why, but first let's talk about this payment that this one of China's richest women made. So she's a chairwoman and the largest shareholder of this company, and she basically wrote a personal check from her own personal account, according to this article, to pay this coupon payment on this bond. So this company doesn't even have enough cash flow right now to pay even a $600,000 coupon payment. So that is troublesome. But the fact this company is worth $100 billion like last year, or so that's quite troubling. So let's talk about why these companies can't pay their coupons or their bonds. Just for funsies, to put that in perspective, let's just, so that $600,000 payment is the same, well, okay, so they have $187 billion liability, and they paid $600,000, so that's like paying $1 towards a debt of $311,000. So that just puts in perspective, $1 and you owe $311,000. So, that's why they're one of the most indebted companies or property companies in the world. Anyway, okay, so let's just, well, why are they flat broke? That's the question, so let's answer that real quick. You'd think a property developer that, well, develops property, and property is an asset. How is it possible that a company with so many assets of unfinished and unsold apartments can't even handle a minor debt payment? Well, this must mean they have no cash flow. And how does a property developer get cash flow? Well, people buy their stuff, right? They buy their units. So this must mean that there is very little real estate activity right now in China. So very little of people buying finished units. One large contributor to this is the fact that there's a mortgage boycott in China. This stems from people having to pay mortgages to a developer for an unfinished apartment building. So can you imagine saying, okay, here's money every month and I can't even live in my own unit, and you seem to be taking your sweet time finishing it. So a lot of people who said, you know what, I'm not gonna pay that. There's no point in me paying for something that I don't have. So that has led to a lot of developers not getting any cash flow. Another thing is that sales have also been slowed because the Chinese government came in and said, hey, developers, you can't cut prices to get your units sold. Otherwise, that could lead to essentially just a spiral of negative prices. So they said, you got to sell at this price and not lower. So that, let me pull up another article. Let me pull it up here. Gold bars used to lure Chinese home buyers amid market slowdown. That's from The Guardian. So basically, the way the developers were getting around the fact they can't drop prices is that they were offering cell phones, cars, and even gold. So according to this article, I think, so the promotion does not state the purity of the gold, but if they were 24 karat 1 kilogram bars, it'd be worth about 18% of the value of the accompanying flat or apartment. So basically they were offering a 20% discount, according to this article, on an apartment building. So you can see here that developers are really trying to sell their units. So besides a normal slowdown, I mean, real estate markets are cyclical. I mean, the slowdown is inevitable in every market. How come this Country Garden, this is so funny, can't just go to the Euro-dollar market and just ask for a bank to give them a small loan so they can make this coupon payment? Why does this shareholder, or well, she owns the company, I guess, why does she have to go out of pocket to pay her company's coupon for her? Well, it's because no bank wants to loan this company any money because of the fact that their bond is about 10% face value. So no bank trusts that they'll get paid back for the money that they will loan Country Garden. So that's, a simple way to pay your debt, or your coupon payment, but the fact that they can't even get a small little a loan on their assets really goes to show that the liquidity here is just drying up, and a default is basically in the cards here. Another thing hitting these companies is the fact that if they took debt in dollars, their debt's getting more expensive. And let me show you here. I got a graph here. This is the USD to Chinese yuan chart, and it does go back 10 years, but we are at a 15-year high when it comes to how much your dollar is worth compared to yuan. So if you took dollars in debt and you're producing goods and services in yuan, then it's harder to pay back your debt, basically. So it makes your debt service more expensive just by the fact that we are at a 15-year high in exchange rate. So that's weighing down a lot of these companies. Regardless of real estate developers, it's just anyone that has a foreign currency that's producing goods and services in foreign currency has to pay back dollars. This economic slowdown has also made capital outflow from China more apparent, and while they style themselves as a closed system, so you can't really just take one out of the economy, there are ways around it. And basically, there's if you get your money to Macau, you can then trade it over into a different currency or a different asset like gold or Bitcoin, and essentially get out of yuan, because I think the smart money knows that they don't want to lose half their value because they're holding yuan. They'd rather turn that into a safe haven asset like USD, gold, or Bitcoin. So as much as we talk about inflation in the USD, it's still doing better than a lot of these currencies across the world. So that's just indicative that there's economic slowdown in China. So that's not good news for, the whole world. While it may be good for manufacturing here, any slowdown, any economic turmoil in China will spread to the US and to the Western world. And so why is all this important? Why do I care talking about China? You let them have their own troubles. I mean, they created it. They have their own policies and whatever. I have my real estate here. What do I care? Well, if it's China's problem, it's a global monetary problem. And if it's a global monetary problem, it's a US problem. And if it's a US problem, then it's a US citizens problem, because, we're connected to everything. I mean, our economies are just so interconnected that we can't really be so far away from this, especially if it has the recipe to become the next, for China to start the next great financial crisis. So we're gonna, keep our eyes what's happening in China, because it can affect everyone, and especially you, right? So thanks for watching. I'm trying to keep you ahead of the curve so you know what's coming down the pipeline. So don't be surprised if this starts the GFC 2. So it's not gonna happen tomorrow, but we just gotta keep our eyes on the prize here, make sure we know what's coming, and be smarter than the average bear. All right, with that, thank you for watching, and I will see you next week.